I'm Matt Bishar with NAREIT.com here in New York City for REITWeek 2015. I'm joined by Bob Connolly, finance professor with the University of North Carolina at Chapel Hill. Bob, thanks so much for joining.
Thanks for having me.
Now, can investors in REIT index products assume efficient market pricing? And if so, does the same hold true for individual REITs?
It's a good question. So the answer is, for a long time, we've been very clear that indexes are very efficiently priced. So what we've been doing is asking the question at the level of an individual REIT, could investors expect that the price discovery process was really working literally in the sort of textbook manner? And the answer from our work is it looks very much like the average REIT works extraordinarily well in this respect. We've got a few now and again where the efficiency isn't all we'd look for from a theoretical perspective. But the cool part that we found in our work is the market seems to fix itself. So a REIT that has a tough quarter in terms of the price discovery process, they tend to bounce back very rapidly. So from an investor's perspective, I think they can take it as an article of faith. The average REIT, in fact, just about every REIT is going to be efficiently priced every single period.
And what factors contribute to the efficiency of an individual REIT?
It's an interesting question. So there is some literature that suggests that institutional ownership plays a big role. And in fact, what we discovered is not only do institutional owners play a big role, but it's the long-term, slow traders that actually are the most crucial for understanding the efficiency process. That is, it's not the trader, the institutional owners that trade a lot that make a difference. It's the buy and hold folks that make such a big difference. And that we sort of felt was a really remarkable finding that we hadn't seen anywhere in the literature. The other part that contributes is REITs that have traded options turn out to be generally more efficient. REITs with lower trading costs, spreads, lower price impact because of bigger depth in the market, they turn out to be more efficient as well.
And what about premiums and discounts to a REIT's NAV as it relates to efficiency?
Yeah, it's an interesting question. So financial economists like myself who think about these things think of inefficiency as a story about how the price discovery process works. But that difference between price and NAV is a unique part of the REIT market, and it gives us what we think of as sort of what we call mispricing, for lack of a better term. So inefficiency and mispricing aren't exactly the same thing, but the cool part here is every time you see big mispricings, you can predict big inefficiencies in the subsequent quarter. By contrast, if you see inefficiency that's very large, it doesn't mean you're going to have mispricing in the sense of the difference between price and NAV. So it's an interesting and what we've discovered very complex and intricate relation. We're actually still trying to sort out some of the factors that simplify and give us a clearer view.
Great. Bob, thank you so much for your insight.
Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.